Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about how you should properly invest $1,000 into the stock market. Now the awesome thing about investing in the stock market is anybody can do it. You just have to be over the age of 18 and you can literally sign up for a broker today with Robinhood or M1 Finance or TD Ameritrade. So don't make the excuse saying you can't do it or you don't know how to start. It's all about starting and just being consistent. So I hope you guys enjoyed the episode, and if you do, make sure you guys smash the like button because it really helps me out. Also, if you guys want to learn more about investing in the stock market, make sure you guys check out my course. It'll be the first link down below. So now that jump into it, roll the intro, let's go. Bang! Now, if let's say you guys take that $1,000 and you just invest it into the S&P 500. The S&P 500 on average gets right around a 10% return. Now, if you don't touch it for 40 years and you reinvest all of your dividends, you would have around $45,000 in 40 years. So it's all about starting off as young as you can and being consistent with your investments. Because imagine if you could invest $1,000 and then $100 a month, or maybe $10 a month. That would definitely jump from 45 to 65, almost to $100,000. So it's all about starting off as young as you can and being consistent. So now let's talk about how I would invest $1,000 into the stock market. Now when you guys have a broker, especially for beginners, make sure they have fraction shares because it will really help you out. So Robinhood, M1 Finance, it'll be okay. So starting off with my largest investment. Now I would take around 40% of my money and invest it into ticker symbol SPY. Now this is the S&P 500 ETF. The reason why I like this is because it has a very low expense ratio, so I don't have to worry about any commission, fees, or anything like that. It's like around 0.04%, so it's like $4 for every $10,000 you have invested. It's really nothing to be worried about. Now I'm going to invest into the S&P 500 because it gets around a 10% return and I don't have to check the day-to-day price for this. I know over the course of the long term it's going to go up in value. I'm really just betting in the US economy, which I think will go up. Then what I'll do is I'll take around $150 and invest it in ticker symbol BND. This is Vanguard's total bond market ETF. Now you might be saying, well Carter, why would you invest in bonds? Bonds don't make any money. It's not right. You shouldn't invest in Tesla. Well, the reason why I'm investing in the bond market is for a couple of reasons. The very first reason is because I'm going to get a 3.5% dividend. I'm going to get that cash flow coming in that I can either reinvest into other companies or reinvest it right back into the bond market. And on average, this gets around a 5% return. So it's better than leaving money in a savings account. Now, after I invest that $150 into the bond market, what I'll do is wait. I'll wait for the S&P 500 to fall more than 6%. The reason why I do that is because if the S&P 500 falls more than 6%, I will slowly start taking money out of my bonds and putting it into the S&P 500. The reason why I do this is because the S&P 500 gets a greater return on my investment. So that's why I do it, because bonds, you use it as a defense in your portfolio and you just build up cash flow. Cash flow is king. Cash isn't king. Cash flow is king. So if you would have just left your money in your account and not put it in anything, it would have just been sitting there. So I put it in the bond market to kind of use it as cash, get cash flow coming in, and when stocks or ETFs fall, I take it from the bonds and put it in the ETFs. Now right there I just invested around 55% of my portfolio. So now you might be saying, well Carter, I want to buy Tesla. That's what I want to buy. We'll get the Tesla, just give me a minute. So now what I'll do is I'll take around 40% of my money, invest in high quality dividend paying stocks. Now you might be saying, well Carter, is Tesla a dividend paying stock? No, Tesla does not pay a dividend. Tesla is a growth stock. We'll get to that, just give me a minute, I promise. But now I'm going to be investing in companies like Apple, Microsoft, Home Depot, Coca-Cola, stocks that have been around the block for a while, are continuing to grow and increase their dividend payouts. Now the reason why I like this so much is because these are going to be the stocks that really outperform all the major indexes, and they're going to really boost your portfolio up. So you can put some tech stocks in here, you can put some stocks that really have just been around the block. I classify these as blue chip stocks. Now with the 5% left over, this is where you can finally invest in Tesla. You can invest all that 5%, or you can split it up and invest a little bit in Tesla, a little bit in NEO, a little bit in Beyond Meat, a little bit in Snowflake. this is where you can just invest into a lot of riskier stocks. Riskier stocks are more volatile and definitely carry a lot more risk. So it's always smart to have those ETFs, bonds, or blue chip stocks to act as your defense in your portfolio. So that is how I would properly invest $1,000 into the stock market. And honestly, guys, doing this, you would have an annual return of around 19%. So I hope you guys enjoyed it, and if you guys did, make sure you guys smash that like button and subscribe to the channel. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe out there. We'll see you tomorrow, guys. Take care. Bam!